Here is a shocking thought. Most people do and actually lose a ton of money in the stock market. They just fail to make any. It's not because they picked the absolute worst stocks in history. It's because they made small, silent mistakes that slowly ate away at their returns, destroying the power of compounding without them even noticing. These mistakes don't seem dangerous at first glance. They feel smart, even proactive, but over time, they are financial poison. Today, we're pulling back the curtain on the 7 most common investing mistakes that quietly kill your returns. Stick around because recognizing even one of these could change your financial future. First up, the classic mistake, waiting for the perfect time to invest. We've all been there, right? Thinking, I'll just wait until the market calms down, or I'll invest after the next dip. But here's the truth. The market rewards time in the market, not timing the market. Waiting for that perfect, risk-free moment is like waiting for a unicorn to appear. It's not going to happen. While you're sitting on the sidelines with your cash, you're missing out on dividends, growth, and the magic of compounding. The cost of this delay is invisible in the short term, but over decades, it's absolutely massive. The best time to invest was yesterday. The second best time is right now. Next, let's talk about mistake number 2, overtrading. Clicking that buy or sell button can feel incredibly productive. It feels like you're doing something, taking control. But in reality, it's often one of the most counterproductive things you can do. Every single trade you make comes with costs. You've got transaction fees, potential taxes on your gains, and the mental toll of trying to outsmart millions of other investors. The market doesn't reward hyperactivity. It rewards patience. Think of it like planting a tree. You don't dig it up every week to check on the roots. You plant it in good soil, water it, and let it grow. Your portfolio needs that same patience. Mistake number 3 is a big one. Panic selling during a market drop. Look, volatility is not a sign that something is broken. It's the price of admission you pay for the chance to earn long-term returns. When the market turns red and everyone around you is freaking out, the urge to sell and stop the bleeding is almost overwhelming. But selling during a downturn is the single best way to lock in your losses and guarantee you miss the eventual recovery. The investors who truly win in the long run are the ones who have the discipline to do nothing when doing nothing feels like the hardest thing in the world. They know that downturns are temporary, but selling is permanent. Let's move on to a silent portfolio killer, ignoring fees. A 1% management fee doesn't sound like much, does it? It's just a tiny slice, but that 1% isn't a one-time cost. It's an annual charge that compounds against you, year after year. Over a 30-year investing horizon, that small 1% fee can devour nearly a third of your potential returns. Think about that, a third of your nest egg gone. This is why low-cost index funds and ETFs are so powerful. They don't have a secret sauce for picking winners. They just quietly outperform the competition by leaking less of your money along the way. Pay close attention to those expense ratios. They matter more than you think. Finally, we have mistake number 5, which is constantly switching your strategy. 1 month you're a value investor, the next you're chasing growth stocks, and the month after that you're trying to time the market with crypto. Every time you jump from one strategy to another, you're essentially hitting the reset button on your compounding journey. You never give any single plan enough time to actually work. It's like trying to cook a meal by constantly switching recipes halfway through. You'll just end up with a mess. A good, consistent plan that you stick with, even when it's boring, will almost always beat a series of optimized but abandoned plans. Find a sound strategy and give it time. You don't need to be a genius to build wealth through investing. You just need to be disciplined, patient, and avoid the major unforced errors. It's about sticking to the plan, especially when it's hard. If you're ready to play the long game and protect your financial future, let me know by commenting long game down below. Thanks for watching. Don't forget to like this video and subscribe for more content to help you invest smarter.